Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, October the 22nd. The year is 2021. Let's talk trading. It's time for the weekly wrap up. This video, like all the other videos, are for educational purposes only. Your results may differ from mine. So I hope everybody had a good week. Now, looking at the weekly chart, we can see that all the gaps have filled. I remember it was one of these pairs up here wasn't filled the last time we looked. And look where we are. We are 8 pips above the weekly open, 72 pips off the high, 53 off the close. So that means that any weekly rat zone traders got paid off. It also means that any weekly buy zone traders were also paid off because buy zone traders trade away from the open and the rat zone traders trade towards the open. And as we look at the opening range charts, you can see we had the opening range for the week, and today we dive back into the opening range for the week. We crossed below the open for the week, and then we came back above it. Oh, it's interesting. I just noticed there was a member that was asking about how to use put the ATR on the TRO dashboard here, and so I guess I left that on this chart. So you can see here we've got for the 14 we've got an ATR of 98 on the pound. 120 pips above the yearly open. 290 above the monthly open, and next week will be the last week of the month, so we'll have 5 more trading days, and we'll just see what happens for the month of October. We had an inside bar yesterday, and as you can see here, now, depending on your broker may not have showed this as an inside bar, so it's broker dependent because if the high was just maybe 1 pip more or a couple of points more, then it wouldn't have been an inside bar. So it's just something to note on these real close calls here. But on this particular broker, we broke out of the inside bar, which was the previous day's low, and right now we're 14 pips below it. For the range today, only 79, so we were below the ATR, and only 5 pairs actually had more than 100 pips. It was kind of a fun day trading the pound. I don't know if you were in front of your screen when we had this big drop. I guess there was some news about Brexit and the EU, and something about the EU was going to. I'm not really sure exactly what was said, but it's obvious that the market didn't like it. And I had just exited a trade for about, I don't know, maybe a 1 pip profit about a minute or two before a price just dropped like a rock. But I did get some of the bounces here trading long. You can see that the green rats had a few opportunities to get some cheese. And one thing to note was, let's see, it might be easier to show on a different chart. We weren't quite in that weekly rat zone today, but we were close, and the opportunity to trade long out of today's rat zone. We hit the pivot today. We didn't quite hit the pivot for the week. We just missed it by, what, 14 pips, I think? Yeah, 14 pips. I forgot I had the calculation here. And I was just eyeballing it, looking at the low here versus the pivot. And for the month, we've taken that pivot out. So we'll have to wait and see what happens next week. Do we take out that pivot? Because you can see here, we took out a missed pivot this week. So we might take out one next week. In and out of the lower wick zone a few times. That's the daily wick zone. Noting today that, price did crisscross above that weekly open, so there was opportunities to make money trading the weekly open as well as the daily open crossover. So for the week, 125 pip range, only at the 16th percentile, well below the average of 172 over the last 12 weeks here. High minus previous high, nice breakout, 61 pips at the 75th percentile. We did not break out of the low the previous week. High minus close, 72. Close minus low, 53. Once again, rat traders were paid off of the weekly highs and lows. As far as the day goes, once again, 79 pips. High minus close, 53. Close minus low, 26. So buy zone traders were paid off. Rat zone traders were paid off. High minus the open 80, open minus the low 45. Buy zone traders were paid off. That is, if you took the pips when the market presented you an opportunity to take the pips. Looking here at the Wall Mall price action setup, we've got the previous H1 high. You see this hour, you could have punched out for a few pips. Notice that we had some very interesting ranging here. And as you can see here, it was making lower highs, which if you believe in the trend, it's saying it's trending down because it was pretty much making lower lows all at the same time. And then we've got this ranging here. But if you look at, I believe it's was it the 30-minute chart? Or let me see, there was one of these charts, you could really see how it stepped down. We had pretty much between 37.90 and 38.10, we had this happening, and then between the 80 and the 90, it ranged here. Then you can see here between the 60 and 70, and then between the 40 and the 50, it did have a couple of breakouts, but then you say between 40 and 60, which I call 40 area the launch pad, and Walmart says something in the 60s, you always get strange things happening at this level. But note during the past 4 hours how the range has dropped down as opposed to the bigger ranges. Here. We had some really nice ranges today. And on a real simple lower high, higher low screen, you can also see the opportunities to take trades. But it really was ranging. You can see that. And for the support resistance traders, you can see here we had support, and then it turned into resistance, and price, it pulled back a few times. Finally, here at the end of the day, it broke through the 60 level. Trying to remember, I think there was a question out on YouTube. Somebody wanted to know about the 1, 2, 3 trades. There's two different 1, 2, 3 trades. And so let me see if I can explain them to you. There's the 1, 2, 3 where you have a higher low, a lower low, then a higher low. That's called a 1, 2, 3 pattern. So you could see it here. Higher low, lower low, higher low. So this candle would usually have a arrowhead here. And then so you'd be looking to go long. And then at the top, you have a lower high, a higher high, a lower high. So that's a 1, 2, 3 at the top. Now, that's one of the patterns. The other 1, 2, 3 pattern is you, as you go through the day, it would put in a low, and it puts in a high, and then it maybe puts in a new high and a new low and a new high and then a new low and then another new low and then another new low. So what you do is you look and you see, did the previous candle put in a high or low for the day? And so let's say in this particular case right here, this is early in the session, but it put in a low for the day. So then what you would do is on the next candle, you would look to go long at the open. And then you say, and then this candle closes, and so when this candle's open, did the previous candle put in a high for the day or a low for the day? It put in a high for a day. So you see price didn't really get close to it, but then it just dropped. And so then here it put in a new low, and then price put in another new low. But on the 1, 2, 3 is you're always looking at the previous candle. And if the current candle puts in a high, then usually it's invalidated, especially for the new people. But you can take your chances and then go with the reversal here. And in this case, it would have paid off. Then it put in a new high. And then what happened the very next candle? It broke out, put in a new high, reversed. And then this is where, once again, if you're an experienced trader, you look at this previous candle top, and I call this top scraping, but you're basically looking at that. And this is also, you can consider it a wick zone trade. So it came back into that previous candle's upper wick zone, exited. So right here, you could take that short. And of course, yeah, it paid off this time. Sometimes it does, sometimes it doesn't. That's just trading, right? But that's the other 1, 2, 3. And so we also talk about the holo method, and you see holo and 1, 2, 3 are very similar. The difference with the 1, 2, 3, you're always looking at the previous candle to see if a high or low was made. And if it wasn't, then there's no 1, 2, 3 trade. A holo trade, on the other hand, is you're looking at the highest open. And so even though this broke out, when it started coming back the other way, going short here would still be a valid trade. So it's not a 1, 2, 3, but it's a holo. Because sometimes a holo can be a 1, 2, 3, and sometimes a 1, 2, 3 can be a holo. So I hope that explanation helps you understand the 1, 2, 3. And I replied to you on YouTube, and I put links to 3 different videos that discuss the 1, 2, 3. So hopefully that clears things up and it doesn't confuse you even more. So, fellow traders, kind of an interesting week. I've got a topic, I think, for next week you might like, so I'm going to keep it secret till then. So hopefully you traders will come back and watch the videos. I also hope you have a real fun and safe weekend. I hope you had a profitable week. And so when you come back next week and you sit down at your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.